Hi and welcome to the market alert for Thursday, the 25th of February 2021. So, as I said in yesterday's market alert, yesterday afternoon it was going to be Powell, Yellen and everybody else trying to reassure the world that they still have full control. And it worked a treat, as it says here. Stocks and bonds suddenly bid on Brainard, Powell double down, dove down. So bad news is good news again, and this has been the theme for the last 13 years, since 2008 when QE started. Well, it started in March 2009, but that's when we had the financial crisis. As it says here, the Fed just keeps getting more and more dovish, so expect negative rates, etc. And as it says here, whatever preconceived notions Powell had when he first took the job, he's now being faced with reality, and the reality is it's going to hit the fan unless you keep printing money, and that's exactly what they're going to do, which is what we've been talking about in the market alert for the last, to say, 13 years. That's all they'll do. They'll just keep printing and printing until the dollar is worth absolutely nothing. And of course this creates a policy risk. And basically, I mean, how can you continue to do the same madness and expect to get a different result? And it's all predicated on this, isn't it? Hope is never a good strategy. But this is comforting because really smart investors are increasingly hedging their wealth created from, and I would preface this by saying, real financial assets, i.e. gold and silver. And of course, the wheelbarrow is... how can I put it politely, a Mickey take of the Weimar Republic in the early 1900s, when a loaf of bread cost the equivalent of 100 grand in Zimbabwe style printing of money until everything is hyperinflated. Meanwhile, on the implied volatility, the market absolutely loved this. As you can see, we went down from 1738 to 1706, and you'll see why in a moment when we have a look at the Dow. So the risk has gone at the moment because Powell once again and the cavalry from the Fed have removed that potential risk at this time. That said, though, looming in the background, we can see that we've got the yield continuing to increase, and yesterday putting in a high, if we can just freeze this here, at 141 on the yield, so moving up quite sharply there, and even overnight still above the 140. So there is a risk there, and you can see that the more they continue to print, those taking the other side of the risk want more in return, and that's why we're seeing these yields moving to the upside, as can be seen here. So if we go to a yearly chart, you can see, so from August the yields have gone from 0.5, as you can see there, to the high that we've got at the moment of 140. So let's just have a look a bit further out, and 3 year, and you can see that from January 19 the yields have been dropping, but now they're starting to move quite sharply to the upside there. So 2% should be an interesting target, and certainly 3. So we'll keep an eye on these yields and have a look each day just to see how the markets are reacting there. And let's have a look at news today. I think there's only one GDP that's out at 130. There's actually the weekly jobless claims as well, which they're not actually putting in now as a medium impact news item, but that will also be out at 1:30 as well. Let's start off by looking at the Dow, and you can see in the monthly chart that prices are once again at all-time highs, thanks to just words from the Fed yesterday. If we look at this in the daily chart, you can see that yesterday we had a 600-point move to the upside, and we have a brand new all-time high on the overnight market as well, blasting through the resistance that we had at 89%, drawn in from here to here, and then through the last all-time high of 31,721. So in the German DAX, we can see that prices have been moving to the upside. We've got retracements drawn in from here to here, from here to here as well, and that's what these fib lines are here, and that's why you're seeing an 89 and another 89 there, and that's because one's drawn from this high and the other from this one and this one down to this low. And then of course you've got the recent high here, which is also an 89% from here to here projected back. And then you've got the all-time high, which the market needs to take out. Now overnight, let's just come back a bit here. You'll see that the market, when it kicked off, we finished at 9 p.m. as the Dow closed. And then when we kicked off in the, let's have a look, 2156. No, we've got no break here. The market's traded all the way through, which is slightly odd. Normally we get a bit of a break and then it kicks off again. So we've traded all the way through and then up to midnight here. And that's the high that is being used there. So the high is midnight's high, which is quite strange, which we'll look at a moment in the daily chart. So anyway, we came back down to the 200 MA, and this is the low of the overnight that we've got here. Price is bouncing off the 200 through the high of midnight and sitting on there at the moment, which is not the same as the high that we've got for yesterday. So the low on the overnight is going to be the high of yesterday, which is bizarre. And I don't know why this has occurred unless this is a change, but normally you end up with a cut-off and then we switch to the electronic market. And that's not happened in this chart, which is slightly foxed me. But that's the situation. So the high for yesterday is going to be down towards the overnight low, just for reference there. And yeah, a bit strange that one, but use the high in the overnight at midnight, because if it can hold above there, then it will continue to move to the upside. But really, I suppose the daily one is there, and like I say, I don't know why that's occurred. I've not seen that before, but as long as you're aware of it, then we can work with it. Simple as that. So yeah, the overnight is sideways at the moment, waiting for the futures, which have just kicked off. Actually, I'm late this morning, not because I didn't get up early enough, but because I'm recording this for the second time. The first time I hit the mute button and I've had to record it again, so I ended up with nothing. So that's why it's slightly delayed, but you can see there the futures, bit of weakness at the moment. See how they've kicked off there. Stay above this high is very important, and also the close in the 200 MA, but at the moment showing some weakness there. Down to the DP, we've got 100 points or thereabouts currently. And to move back to the upside and to the all-time high, we also need to get above the R1, and this is ties, this BRN here, 14,200 ties in more or less with the daily, where you've got 190. So that's the DAX overnight yesterday and what to expect today. So let's have a look at yesterday's trading session. So in the futures yesterday, we can see the markets kicking off, and lots of buying there already in the futures at 7 a.m. and you can see I was drawing some fibs in just to see where the market was going to go to. Prices then traded sideways, software stopped, and then we kick off at the usual time there. So having moved up in the futures to the DP, very important level now for the market to launch itself off if it can. And that's precisely what happened, and we're seeing the market moving higher. We had two lots of potential weakness here, which you can see in the red, and prices then moving back to the downside before they come back to the upside, coming off the close and a 50% retracement from this low to this high. I've got to take out the high across here, of course, in order to move to the upside, which it does. I'm having a look at some fibs here, and what I did, I drew fibs from just off the range of this bar just to see, because it's such a big bar, and I meant to do this in the market alert and forgot, just to show where the downside and the upside could be within the range of the previous day's bar. So the next time we get this, I will explain it in more detail. So I was looking for the market to take out that 13,970, which was above this BRN and towards the previous day's high. But you can see here we've got a problem because we've got a lot of selling coming into the market. There's some selling pressure. However, the volume starts to fade, giving the market the opportunity to move to the upside. And we see prices trying to do this, but not having much success. And then we had a potential sell signal, and the market's just trading sideways thereafter. No interest in moving to the downside, and you can see the volume increasing in this bar as we head back towards the upside, because that's what they've been wanting to do for the last 13 years, keep the market moving to the upside. And you can see the market trading through all of the fibs to the BRN, and then we get some more selling. So we've got a double top now with some selling in the market there. We then come back to the 20 bar moving average, we break through, stop at the 78, and we've got a bit of buying pressure around this area. You can see there the volume increases, we reverse, and then I'm having a look at the daily chart just to see, and we come back to 89%, and at 89% they jump straight into the market and buy, bringing the market back to the BRN for the third time. Market stays at the 20 bar moving average, and they come back to the BRM for the fourth time. And prices was that the third time? We got lost yesterday. Third, I think, or fourth. It doesn't really matter. It was just stuck on the BRN and just holding it at this level. The market was waiting for Powell and Brainard in the afternoon. That was the reason. So the market had a bit of a pullback in the mid-morning, and then the afternoon, for the first part of the afternoon, it was just a waste of time, because obviously Powell and Brainard were speaking, and they spoke for a good hour and a half, and unfortunately the software stopped here, and at this point in the afternoon I had to leave the desk, unfortunately, because there wasn't a lot happening. And of course, as soon as you leave, this is what happens. We'll just go back to the DAX, and you will see this as I just wind across, eventually the market moving to the upside there, which you can see after Powell and Brainard mentioned about how dovish they were and how much more money they wanted to continue to print to move the markets to the upside. So a quick look at where we are, and we can see that prices have managed to come back down to the close. There's a lot of volume coming in here to try and support the market at the moment, though. I mean, at some point the market's going to say, look, you can't keep continuing to print like this. The market's seriously overvalued, and it will end. But you know, when that is only going to be determined by when that tipping point is reached with regards to the interest rates on the bonds, etc. Okay, that will do it for this one. If there is anything else to report, I'll let you know. But as ever, thanks for watching. See you in the next one.